Hi everyone, it's Jeff from Keller Williams Realty, and it's been a while since we've chatted. I don't think that we've seen each other since before the holidays, so I just want to start by saying Happy New Year. I hope you all had a great holiday season. Here we are in January, and right here in central New York, winter is finally here. It has finally arrived. It seemed like we were never going to get there, but here we are. This morning is actually January 11th. By the time you see this, it'll be a little bit later. But today our temperature is 2 degrees Fahrenheit and our chill factor is -7. So definitely a little bit nippy out there. And despite all that, the real estate market keeps on moving. We sell real estate 12 months out of the year here in central New York. And if we didn't do that, we might not even have a market because our winter season is pretty long. And of course, I exaggerate a little bit, but people's situations keep things moving 12 months out of the year with job changes, life changes, and everything else that drives real estate activity. Many of you, including myself, see national news all the time about the real estate market, and many people take that national news and automatically assume that it's just like that where they are. All real estate is local, and you'll hear me say that time and time and time again. So you have to look at your own local marketplace, of course, and in most cases, it's also very hyper-local. So it may differ from neighborhood to neighborhood, subdivision to subdivision, village to village, township to township, school district to school district. So when it's time to buy or sell, it's important to really drill down and understand those local market dynamics. However, in a general sense, we are right now mirroring and have for quite some time been mirroring the national market right here in central New York. So what does it look like for 2022 as we move into this year and we're coming off of almost unprecedented times in our local real estate market in terms of appreciation, activity, low inventory, so many different factors have been very unique during the pandemic. Many of us thought at the beginning of the pandemic that we were going to be looking at a housing recession coming out of it, and exactly the opposite happened. So many of us were incorrect, me included. However, we learned as we went, and we saw that things are not always as they appear to be. Looking at 2022, we're definitely still looking at a low inventory situation due to a variety of factors. Prices still expected to increase, although they'll be increasing at a decreasing rate. The inventory levels should be beginning to stabilize a little bit, definitely still on the low side, still a seller's market, but increased inventory levels throughout the course of the year should be the trend. Work from home is just a huge factor in the marketplace, and you see people looking closer and closer at their home and how it not only serves them when they come home from work, but during the workday. So the home office trend is definitely continuing. People are focusing on making the environment the best it can be, adding swimming pools, all kinds of different amenities to their homes, either while they're still living there or when they buy a new one. U.S. economy is predicted to grow by about 3.3%. We've got millennials that are entering the housing market, and because they're such a large demographic, they, along with buyers that are coming off the sidelines who may have lost multiple homes within the last year or two, are going to keep the demand side definitely healthy in the upcoming year. There's also some things going on in financing, which may counterbalance that a little bit. Rates are broadly predicted to increase in response to inflation. Another factor is going to be the Fed's policy with their overnight rate increases, as well as tapering their purchases in the bond market. New construction, also a big factor. The supply chain issues are definitely not resolved, but the supply chain issues led to much higher costs in new construction. Builder optimism is pretty high, and some of those supply chain issues, hopefully all of them, will start to ease in 2022 and lead us to greater price stabilization and a little bit more affordability with new construction. So the outlook is good. Definitely going to be a great market here in 2022 if you're a seller, and there'll be a lot of opportunities if you're a buyer. We've got an affordable market here compared to many others, a great lifestyle. This makes us very attractive to people that are looking to leave large congested areas and looking for a fun area with a great lifestyle where there's a lot of things to do and you can still afford a home and have some money left at the end of the week, the end of the month, the end of the year to do other things that you want to do to support your dreams and support your lifestyle. So I'm all about Central New York. I love it here. If you have any questions or ideas for further videos, please let me know. I'm Jeff Roney from Keller Williams Realty, and it's been great seeing you again. Happy New Year.